Hi everyone, welcome back to Corporate Decoder. Today we are diving into Provectus BIOPHARMACEUTICALS' latest proxy statement, and trust me, it is a wild ride. Get ready for a financial roller coaster with reverse stock splits, executive paychecks, and a whole lot more. Let's get started. This document is a Schedule 14A, also known as a proxy statement. It's basically a document that a company sends to its shareholders, asking them to vote on important issues at an upcoming meeting. Think of it as the company's way of getting your permission to do things, like choosing board members or approving executive pay. The company is having their annual meeting in June to discuss and vote in some key proposals. Whether you're planning to attend or not, they are really encouraging shareholders to vote ahead of time. This makes sure that as many voices as possible are heard. One of the main things shareholders will be voting on is electing 4 directors to the board. They also have an advisory vote on executive compensation, basically asking shareholders if they think the top dogs are getting paid too much, too little, or just right. They want to ratify their accounting firm, and they have a plan to restructure company stock. Here is a heads up. The board of directors strongly suggests you vote for all the proposed directors and for all the proposals. This means they think these decisions are in the company's best interest. Let's take a look at who owns what in the company. This table shows how many shares of common stock each director and executive officer owns, along with anyone holding more than 5% of the company. This information helps us understand who has the biggest stake in Provectus' success or failure. Ed Pershing, who is now the CEO, has quite a few shares through different means. Dominic Rodriguez owns a fair amount of stock. Jeffrey Allen Morris is a major shareholder with over 61 million shares. The board has 4 members, with Ed Pershing serving as chairman and Dominic Rodriguez as vice chairman. It also mentions that some board members are considered independent, which is important for ensuring the board isn't just a rubber stamp for management. They have 3 key committees: an audit committee to keep an eye on the books, a compensation committee to decide how much executives get paid, and a nominating committee to find and recommend new board members. These committees are supposed to ensure things are done fairly and in the best interest of the shareholders. Now let's talk about money. The document outlines the compensation for the company's top executives, including salaries and any bonus awards. No bonuses were awarded. They also cover other benefits like health insurance and vacation time. This table shows the compensation of the top executives, including salary, any bonuses, stock options, and other compensation. The president earned $170,000 plus stock options and other compensation for a total of $2.1 million. The former chief operating officer, Bruce Horowitz, earned only $63,600 for the year. The CEO earned $170,000 plus stock options and other compensation. For a total of $2.1 million, the chief technology officer made a total of approximately $400,000. Here's a snapshot of the stock options held by the executives at the end of last year. It shows how many shares they have the right to buy and at what price. Dominic Rodriguez has options for over 5 million shares at an exercise price of $0.29. Edward Pershing has options for almost 8.5 million shares at the same price. The non-employee directors each earned $80,000. The employee directors earned $75,000. Now, this table is interesting. We're looking at pay versus performance, which compares how much the executives made with how the company actually did, what is actually paid to them. The principal executive officer earned $1,528,567 and the non-Petch 2 ACO $704 in 2024. The company had a net loss of $4,763 to $734 $218 in 2000, all as the shareholder return was $24.18, $21 and $2,000. The shareholder return was $21.18. In 2023, the pension $400 and the net loss was $3,100 $20,400 and the net loss was $3,154,400 and the net loss for $3,554,400 and the net loss was $3,194 and $454,400 and the net loss was $3,144,401,763. In 2010 earned 254 earned 2054 earned him 250. The PO earned 2054,405 to 44,401 false. This section outlines the rules for any deals between the company and its executives, directors, or major shareholders. The goal is to make sure these transactions are fair and above board. All such deals need to be reviewed and approved by the audit committee. Related parties, including Ed Pershing, funneled $450,000 into the company in 2024, and $415,000 in 2024, and $415,000 in $2,025. Time to meet the nominees for the board. It lists their names, ages, and backgrounds, giving shareholders the info they need to make an informed decision. We have Webster Bailey, John Lacey, Ed Pershing, and Dominic Rodriguez. This proposal asks shareholders to give a thumbs up or thumbs down to the executive pay packages. While the vote isn't binding, it does send a message to the board about what shareholders think. The company wants shareholders to approve their choice of CBIZ CPAS PC as their independent accounting firm for this year. It's a standard procedure to ensure the auditors are on the level. It mentions the fees they paid to their previous accounting firm, Markham, for audit services. In 2024, the company paid $117,935. In 2023, they paid $115,117.15. Here's a big one. The company wants permission to do a reverse stock split. This means they would combine a certain number of existing shares into one new share, which would increase the stock price, but reduce the number of shares available. The board would have the power to decide the exact ratio of the split, somewhere between 1-for-10 and 1-for-50. The company hopes a reverse stock split will make its shares more attractive to investors. The increased stock price might make it easier to get listed on a major exchange. Here's a table showing how a reverse stock split would affect the number of shares, with common stock from 4-20 and 279,779 shares. There would be a range between 42,000 and 2098 shares, depending on the board's decision. It would also affect common stock equivalents. The company currently has 635,699 shares. After the potential reverse stock split, it would range between 65,500 and 12,070 shares if the ratio is 1-for-10 and 12,070 shares if the ratio is 1-for-50. Here's a look at the preferred stock before and after a potential reverse stock split. Their shares go from 17,10,754 to either 1,715. If the reverse stock split is approved, the company also wants to reduce the total number of shares they are authorized to issue. Basically, they would shrink the pie to match the smaller number of slices. They say this will align the number of outstanding shares with a reverse stock split and show that they're being careful about issuing new shares. Now let's step back and look at the big picture. This proxy statement paints a picture of a company trying to boost its stock price and attract more investors through a reverse stock split. However, it is losing money each year. The executives get high compensation despite the company is also dependent on related party transactions to keep afloat. What I find most concerning are the financials. The company continues to operate at a loss, while some executives receive substantial compensation. There are opportunities here, but it's really hard to assess this company's true potential. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment below. What do you think of this company?